you probably have heard of the word Forex trading and you want to get involved with Forex trading. This is the right video for you. By the end of this video, you will not only be able to place your first trade, you will also be able to analyze the market, find trades, find setups, and start on your journey towards being a successful Forex trader. Now, if you've been wondering how Forex trading is done, this is done exactly the same way as you would do with a Forex bureau. You know, different countries have different currencies. Like in the UK, they use the Great British Pound, and in the US, they use the US dollar. And also in some other countries like South Africa, they use the South African rand, and in Japan, they use the Japanese yen. You see, in China, they use the yuan. In Singapore, they use the Singapore dollar. Different countries have different currencies. Now, for example, when you're traveling and you're going to the airport to travel to the US, and you say you're from Uganda and you want to go to the US, you can't take Ugandan shillings to the US and start transacting in the US. You need to change the Ugandan shillings into US dollars so that you can be able to trade in the US market. That is where Forex trading comes into play, or foreign exchange. Now, the term that most of the people know or use is foreign exchange, but foreign exchange can be done through a Forex bureau, or it can also be done through leveraged trading, where you get leverage for you to be able to trade through a Forex broker or through a crypto broker, whatever you choose to do. Now, in trading, there are so many terms or terminologies that you need to learn, but in this video I will not go in depth for all the terminologies, like what is a pip, what is a stop loss, what's a take profit. All that you can find that on websites like babypips.com, or you can just Google search that. You'll be able to find all those answers. In this video, I'm going to give you the backbone that you need for you to be able to become a profitable beginner trader. Now, what do you need when you start trading Forex? You need to understand that Forex trading is the exchange of one currency into another currency using an exchange rate. If you go onto the charts, I will show you a foreign exchange chart in a moment. But when you're trading, you need a foreign exchange technical chart for you to be able to see the representation of the price action between the buyers and the sellers, those people who are buying or exchanging one currency for another. You need to see that on the chart so that you can be able to gauge market direction. But before we go into the technicals, let me give you guys a short breakdown of how Forex trading is done. Just as you would walk into a Forex bureau with, say, British pounds and you want to change to US dollars, there is an exchange rate. The exchange rate is what determines how much money you are going to get, how much of the US dollar you will be getting in exchange for your pounds. If the exchange rate is higher, then you will get more dollars for the pound. If the exchange rate is lower, then you will get less dollars for the pound. I'll show you that on a technical chart in a moment. So when you walk into a Forex bureau, you have to have an understanding of what the exchange rate is. That is nowadays done on a computer. You've heard of Forex traders. We don't walk into a Forex bureau to do trading. We do that on our computers, on our laptops, on our phones. You can do it anywhere in the world. It gives you the location freedom. Most of the people who come into trading are attracted by that life of freedom, not being locked up in a 9 to 5 or having location freedom. Those are some of the benefits you get with trading. And being that trading is a leveraged business, Forex trading is a leveraged business. You can leverage a small amount of money to be able to make a considerably high amount of money. I'll explain to you that in a moment. But as we go on with the video, guys, if you like this content and you're new to the Forex trading space, be sure to like the video, subscribe to the channel so that you don't miss the insights and important strategies that you need to succeed as a trader. What do you need to trade? You need a Forex broker. A Forex broker is your go-between between yourself and the liquidity. Now, what is liquidity? Liquidity is where all of your orders go to. For example, if you place a buy, you want to buy pound against the US dollar, your trade or your order goes through a broker who processes your order and sends it directly to the market where your money is then exchanged for dollars, and then it comes back to your account and reflects on your platform. For example, if you're trading using a platform that is called MT4 or MT5, you will see all the running profits just like you see here. I'll show you like here. These are running trades, and you can see the trades that are opened here are running trades, and they show the profit and loss that is happening on that account. That reflection is coming from the market. That is what is happening to your trades based on the direction that you chose. Now, to make profit in the market, you need to do what we call technical analysis before you place a trade. You have to go onto the market, onto the chart, and check whether the market is going to buy or it's going to sell. The details of that you can find using the link that I'm going to leave in the description of this video. You'll see a playlist of all the strategies that I teach here for free. You'll be able to learn how to do the technicals there. But here, I just want to explain to you guys how you can start doing this. You have to first get a broker. A broker is like a bank. It's like a bank where you deposit your money. Then you use the money that you've deposited to buy and sell different currencies or different assets. Now, the broker is like your manager. He manages your account. He keeps your money safe and connects your trades to the market directly, because you can't go and sell to other traders around the world without a broker, because you're not connected to those traders. So the broker is the one who connects you to a pool of other traders. A liquidity provider is just a pool of other traders that are willing to buy and sell from you. So the broker connects you to the liquidity where you'll be able to place your trades and make profit or make losses. Now, in trading, there's what we call leverage. As retail traders or small investors like us, when you come into the market with $1,000 or $5,000 and you don't have leverage, leverage is a multiplier of the amount of money that you've invested. For example, if you come with $1,000 and you want to place a trade, you may not be able to place a trade on a normal broker with $1,000. Why? Because the amount of money required to trade in the market, trade in the Forex market, is a big sum of money. Most of the traders, long time ago, like from 1995 below or before 1995, they used not to have the advantage of the leverage that we have now. So they used to use a lot of money. For example, people used to use $100,000 and above $50,000 to be able to just place a trade of like a small position to make money in the market. But now for us in this modern era of trading, we have what we call leverage, and leverage is given to you by the broker. The broker can give you a leverage multiplier of 10, 20, 30, 50, 100, 500, 2,000, some even give unlimited. So if you deposit like $100 on your broker, if you want a good broker, you can check also on the link in the description. You get a good broker which you can use to start your trading. But you deposit your money in the broker, and then that broker gives you what we call leverage. For example, if you deposit $100, you can choose a leverage of 1 to 100, which multiplies your $100 100 times, which means you'll be able to trade with a margin of 10,000 US dollars. So the broker gives you leverage for you to be able to trade. Now, that's the advantage of leverage, is it allows you to make profit with a small amount of investment. But leverage can also cause you to lose your money faster if the leverage is very high. So choose a moderate leverage. Now, to go on to the next step, when you're trading, there is what we call a stop loss and a take profit. A stop loss is where you set your order, you set a level on your chart or on a trade where you don't allow the market to take more than that. For example, if you take a trade, if you buy the pound against the dollar and you hope that the pound is going to go up, then the pound goes down. There's a level on the market when you're taking a trade where you set a stop loss and you say, if the market reverses to this level, I am happy to lose that amount of money, but not more than that. For example, you can set a stop loss at $10, negative $10. If the market comes to that level, the market will close you at negative. You lose $10. But if you leave your trade without a stop loss, if the market goes against you, it can keep on going down until you lose all the money you have on your account. So there's There's that thing we call a stop loss, which is very important, and then there's also what we call a take profit, where you set your level at a point where you are willing to take a certain amount of profit if the market goes in your direction. Now guys, if you've so far followed this, give a like, comment down below if you've not understood something. I'll explain it to you guys in more detail if you want to. But before we go any further guys, please, as you're looking to trade, don't rush yourself, okay? Try to learn all the basics step by step, how to do your technicals, your fundamentals, and all that. Fundamentals are just news events. That's a more complicated thing for me to explain to you guys in one video because it's a very broad topic. Fundamentals are the driving factors in the market. They help to gauge how the economy is healthy or it is deteriorating. It also shows you how geopolitics and all that affect different economies, and so that affects also their currencies. But without dwelling so much on that, let me guys show you a very simple way you can start to draw levels on your chart and gauge whether the market is going to go up or go down. For that, I'll show you guys on the chart behind me here. This is a technical price chart that shows the pound against the US dollar. As you can see here, the word GBP USD, as you can see here, GBP USD is just the Great British Pound against the US dollar. So the Great British Pound is the quote currency and the US dollar is the base currency. Now, when you are buying or selling in the market, you are basically buying or selling the pound, which is on the left. You're buying and selling the currency pair, which is on the left. I mean the currency which is on the left, and you're selling or buying the other currency. For example, if you are buying the Great British Pound, it means you are exchanging your US dollars for the Great British Pound. And if you are selling the Great British Pound against the US dollar, it means you're selling the pound and buying the dollar. So it is interchangeable. That is called a currency pair. There are so many currency pairs that you can give yourself. There's pound dollar, there is euro USD, which is the euro against the dollar. There's USD JPY, which is the Japanese yen against the dollar, and so many other combinations that you can look at. You can just do your Google search and research what a currency pair is. But here on the chart, this is a technical price chart. So most of the beginners like to trade support and resistance. Support is just the floor of the market where the price did not exceed. For example, this place here is an area where the market stopped before going up. So you can say that this is my support, that when the price bounces here once, like you can see here, it bounced once, bounced the second time. When it comes back there the third time here, you know that the market is going to go up, which means that the value of the pound, which is the currency to the left, is going to increase, while the currency to the right is going to decrease in value. So when the price is going up like this, you're only looking for buying opportunities. For example, if you place a buy trade down here, like if you place your buy trade around here, for example, if you buy from here, this tool here is just used to help us understand the risk to reward ratios that we are trading. For example, we are risking, the red part is the stop loss, how much we are losing, and the green one is how much we are gaining. So if we place here this tool and we put our stop loss down here, meaning we are going to lose if the trade comes back to this level here, then this green part is what we are going to win. If you place your trade and you hold this trade and put, for example, your take profit up here, you can be able to make all this money as the pound gains value against the United States dollar. It can also work if you are looking at a level of support like here. For example, there's one touch, second touch, third touch. So this is an area of support like this. Many traders look to buy from support. So you also come here, you have one touch, second touch, third touch, you can buy from here. When you place a buy trade from here and you put your stop loss like below here, then you can target your profit level according to how much money you're looking to take. So that is for buys using support and resistance. Support is an area where the market bounces at least 2 to 3 times, like 1, 2, 3 times, for you to confirm that the market is going to go up. And resistance is the opposite. It is the ceiling. Okay, the ceiling, like it is the ceiling. Like this area is the area of resistance right here. Okay, this is a resistance. So market bounced once, it bounced twice, and on the third time when it bounced like this, you can sell the market from that point right there, and then you can put your stop loss just up slightly above resistance, and then you can take your profit at the bottom. So basically, support is the floor of the chart and resistance is the ceiling. That is how you place your trades using a simple strategy. Guys, I don't want to make this video very long, but if you want a more detailed video, you can also go and watch this video right here. It will explain to you in more detail how you can start trading Forex for beginners. And if you have more questions, you can ask your questions down below. Thank you guys for your support. Subscribe to the channel so that you don't miss any of the videos. Until next time, peace and out.